let's put the focus on Cipla, where again the earnings were indicating growth here. There was a lower base last time, but that's the question again we're going to ask to the management here. Mr. Umang Vohra, the global CEO and MD of Cipla, and Mr. Kedar Upadhyay, the global CFO of Cipla, again are joining us to give us a sort of interpretation and also in terms of results and also what we should be expecting going ahead here. First up, Umang, again, let me ask you, the first question would be that what are the sort of main growth drivers for this quarter for the domestic business, how that has been, and because as we know, there has been lower base effect, but the question here is how much sustainable this performance is going to be?
So I think the volume growth that we've seen in India will be sustainable. I don't think we'll be able to sustain a 22% growth. It's got a base effect to it as well, which is from the previous year. But I think there's strong volume growth to the extent of 10 to 12% in India, and Cipla will try and grow higher than that in market.
Umang, tell us with regards to the US markets, how much of the price erosion on an average here? Because over the last couple of quarters, that has been the main sort of worrying point for the markets in terms of gradual decline in the price levels, the price realizations here. So this quarter, how much was the price erosion?
So we are seeing about a 10 to 12% price deflation, which is, quite normal for the US. The US usually shows about 6 to 8%. We're currently in the 10 to 12% cycle. I'm not sure when it will normalize. I think there's heightened competition in the US, but we're hoping to offset that with the limited competition launches. And, I'm hopeful that the next 1 or 2 quarters will see higher growth from the US.
Well, so again, hoping for some decline here. But Kedar, coming to you, is the margin and the growth looking sustainable to an FY19?
Well, our gross margin and EBITDA margin at company level is subject to multiple factors, but I would like to believe because of the opportunity to scale up some of the important launches which were made in the US, contribution coming from that part, as well as the element of cost control. I would like to believe we have an opportunity to improve our EBITDA margins further, but subject to multiple factors and subject to multiple headwinds which are on the horizon. For example, we alluded to the pressure because of Chinese sourcing and inflation because of the commodities and fuel price hike in the call yesterday. So some of those adverse factors are on the horizon. But yes, our focus is to have a year-on-year margin improvement trajectory.
Right, Umang, what about the launch of one complex drug and again, the fourth quarter was again basically expected from the fourth quarter to first quarter. Again, that was expected to be a strong quarter here. So, what about the launch of drugs? And again, the question perhaps that the launches have not been again the way again they should have been. So, what's the reason for the same?
Yeah, I think we've launched a limited competition product every quarter. We've got 2 approvals last